Hello. Welcome to another edition of XFeed. None of that stupid intro stuff. Let's get straight into it. Now, I don't know if I mentioned this yesterday, but I passively did. But here's the exact tweet here from Bearsnake. He said, I had a call with the president of crypto. This is what they said. The new meta is going to be NFT projects which have been building real products over the past 3 years. Okay. These projects have communities like cult-like conviction. Again, that's the vast majority of them. And holders' expectations are properly aligned with the founder's vision. Again, expectations, kind of a weird thing. And then they said a short list below, highlighting Forgotten Runes, Pudgy Penguins, ULABS, Azuki, Cleanosaurs, and Doodles. Now, this list, okay, sure, that's some. However, when you scroll down here, somebody says, well, what about Renga? Okay, absolutely Renga. Let's keep scrolling. What about Parallel? Absolutely Parallel. Okay, listen, we're just changing the narrative to absolutely anything unbelievable on the timeline, but still very interesting that we have different people having different thoughts. And again, people are bullish on things, but should they be? That is the question. And what the hell is that? I might have clicked an ad. Whoopsie daisy. Wow, major news coming out of Polygon. Fox News is launching its own L2ZK chain using the Polygon CDK. It'll be used to build, verify, an open protocol for content authentication. Now, we've heard for a while, I believe, that Fox has been doing different things within the blockchain space, but very interesting to see them back in the headlines here. Again, the mainstream adoption in kind of weird and different ways, but it's still chugging along. If you guys haven't heard, this was news that happened late yesterday, coming out about 9 p.m. ET. Ethereum survives the SEC, coming from Consensus. Today, we're happy to announce a major win for Ethereum developers, technology providers, and industry participants. The enforcement division of the SEC has notified us that it is closing its investigation into Ethereum 2.0. This means that the SEC will not bring charges alleging that sales of ETH are security transactions. Now, this is kind of like a massive news, but did anything like actually happen within the market here over that? Like if we go over to Ethereum and we look at the one-day chart, I mean, that's massive. And okay, it's up like 2%, but you would think there would be a rather significant attention paid to that. And it seems like that's not necessarily the case, but we'll see over time what news sparks it, because the ETFs did, but that didn't. Kind of strange. Now, what's also kind of interesting about this is the fact that Ripple is supposed to be having to pay $1 billion, 100 million. There seems to be this back and forth going on, but Alex Cobb saying Ripple pay 100 mil, but ETH gets a second free pass. Okay. Got it. And from Watcher Guru, same kind of thing. SEC permanently suspends its investigation into Ethereum. And it's just interesting when you're kind of comparing and contrasting these two. I'm going to get into more of that with Fred Cougar here in a moment. From Adam Hollander, just got an email saying my Ledger Stacks will actually arrive on Thursday. And if you don't know what the Ledger Stacks is, basically it is kind of like a touch hardware wallet that was launched and super hyped up a long time ago, and finally they are shipping. It was really nice of them to wait until all my NFTs were worthless before finally shipping. Unbelievable, but true. Tyler here from RWA.world. Here's a myth about RWA liquidity for real-world assets. If you tokenize it, they will come. That is not necessarily true. Real-world assets require real-world liquidity. Why do you think stablecoins are such a massive market cap? Because the US dollar on the blockchain is a desirable real-world asset that people want. And I think this is a great way of putting it. Obviously, we've been talking about Pokemon cards on chain, real estate, yada, yada, all these different things. And it is very, very true where it's like, hey, people actually want it. And once people want it, well, then you're going to see the rush of all of the good things that happen. Now, the timeline's been joking about, and I mean, not really joking, but saying NFTs are dead, etc., etc. But from the Pixels Online community over in Ronin, they had a stream, and it looked like they had 10,000 concurrent viewers, well, 11,000 at a point to celebrate their Chapter 2 release. Now, I'm not super familiar with that, but it does show the different games and communities out there can pull massive numbers, and really, really good to see on this. So, Floating Coconut saying route to 1 million daily active users equals a high chance of a top 20 project, with Aaron responding to that saying, we have every chance of achieving this. Only 9 months into the network and token launch, and only a few into the core onboarding push. This time next year is my target, so he's going for 1 million daily active users by this time next year. Very interesting. Of course, we'll be following along to see if they hit that goal. After 3 years in the NFT space, is there a single person who has taken advantage of their holder IP rights and built a profitable business around their NFT? Now, early days, if you guys were here, there was obviously a whole bunch of ideas where people were like, oh my goodness, we have ownership of these assets, we can do something with it, and it was a way to rally around something. And, you know, if you've started a business, think you need customers. And one of the ways that it kind of felt like within Web3 is if you were a Bored Ape, if you held something in the artifact ecosystem, if you have something that's a cool cat, et cetera, you potentially have a cluster of customers if they like what you're offering. Now, the awkward part that I kind of like clued into pretty quickly with that is, okay, like if I have an ape, why do I want somebody else's ape? Like I would want mine. But then it goes into the products of, okay, well, if it's like a drink or it's just labeling and, you know, it kind of goes back and forth with the notion of it. But this is a really good question. Wouldn't he or she be able to build this business without owning the NFT? Now, on that topic, I know that Bored Jerky is one of the mainstream adopters of that. Again, I believe this is from the Nelk Boys, and they had it branded with a whole bunch of apes from what I remember, but it's interesting because like this logo right here obviously doesn't include apes, but from what I've seen, they have. So I think they're one of the few. There is a few others, I believe, but again, not necessarily in the mainstream type of ways. Fred Krueger is saying the Howey test is a joke, referring to what was going on with the Ethereum no longer having any issues with the SEC. All of a sudden, one phone call from somebody in the White House and the ETH is no longer a security. Now, he does a quick little 5-minute breakdown for this, and I thought it was really, really good. So I'm going to play it here and hope you guys enjoy.
Hey guys, it is Wednesday, June 19th. Bitcoin's at 65,100. And the title of this episode is The Howey Test is a Joke. And why is the Howey Test a joke, and what is the Howey Test? Well, let's start with the second thing. What is the Howey Test? The Howey Test is the SEC's framework for what constitutes a security. It's a 80-year-old test that was created for orange growers. Basically, it says that if you have an investment of money into a quote-unquote collective enterprise, meaning the money is pooled and there is an expectation of return from the efforts of a promoter or the efforts of others in the text, then you have a security. So it's really like interpreting the tea leaves of something that is not meant for cryptocurrency. And, you know, the SEC has basically used this very, very loose framework to sue out of oblivion many companies and ignore other companies. So, you know, this has been the pattern for the last 6 years or 7 years that I've even been remotely involved with crypto. It's always been Howey. There's been literally $1 billion that has been spent on legal fees, analyzing these couple paragraphs of text in this legal opinion from 1930 or so. And, you know, Ethereum was on the verge of being declared a security by the SEC as little as 2 months ago. They had filed suits against Consensus, against the Ethereum Foundation. They had talked about staking being a security.
That'd be wild if staking was.
Signaled the ETH ETF was not happening. And then all of a sudden, Ryan Selkis and David Bailey drum up support for Trump being orange-pilled. And all of a sudden, you know, this entire thing gets thrown out the window. Lawsuits are no longer happening, and you know, the ETH lawsuits are dropped, and we're now signaling that ETH is going to have an ETF. So, to me, this is completely arbitrary. It reminds me of like the Russian government system, where, Navalny is thrown in jail, comes to Russia, thrown in jail for, I don't know, plotting terrorism activities or whatever. Anyways, we're in that kind of 1984 kind of world. What do I think should happen? I don't think this Howey test should even have been in existence. Thing does not apply.
It goes on for a little bit. Holy jeez, guys! If you do public speaking, the amount of times the dude said in between every single sentence, unbelievable. If you ever do public speaking, just pause. It can be fine, but very interesting points regarding the fact that it's just suddenly thrown out the window. Why did we spend $1 billion on legal fees? Was the governments in place not adequately prepared to deal with any of it, and they just defaulted to it? Kind of a weird conversation, but it is strange that ETH, all of a sudden, we're clear. CBB again, the big blur farmer, writing $50,000 checks to join crypto funding rounds to be locked for years into narratives that might be dead within a few weeks is such a waste of time, to be honest. Most of the times, it's just an ego trip to be seen as an angel investor. Private deals are completely saturated, cooked. I mean, I don't really know the behind the scenes of all this, but with the progress that is being made, it's funny how often we saw big investment rounds or collections highlighting, hey, we have these investors, and it was like a marketing tactic, and I feel most people don't really care about that pretty much anymore. Yesterday we highlighted the Grapes pad thing. The Grapes NFT is in the tank. The token's really in the tank. They hyped up that entire thing yesterday. Token's down another 10%. And then they do a sale for some egg thing for $300. Why did these Web3 based companies do this? They just look completely stupid. I don't understand it. Immutable here, though, has now signed more funded games in the first 5 months of 2024 than all of 2023. So Immutable has 147 games. I feel we keep going back to the notion of like, okay, who's playing these games, et cetera, et cetera. But I think over time, again, every ecosystem is going to have massive hits. Every ecosystem is going to have games that amount to nothing and potentially get shut down. But that just shows that, hey, these games are funded and there is a lot of action happening within the blockchain space. And to the point that Alex Becker made a while ago that we read, he was saying you just need one hit within the crypto space and all of that mania starts. So is it on Immutable? Is it somewhere else? Should be interesting to see. And apparently 60 plus of those games are launching over the next 5 months. And that's what we're seeing across the board. A lot of collections highlighting saying, hey, next couple of months, pay attention. My take on that is we've heard that for like the past year across the board, and that's not necessarily come true. So we will see if this time is different. WonderFi here is saying prospects for retail trading, crypto trading in Canada are looking good, and a convergence of factors, including the local regulatory environment, is likely to continue driving market growth. Again, cool to see that Canada is doing some positive things. This was a wild update. This thread isn't too lengthy, but if you haven't seen, there is some serious problems going on with a big auditor in the space. A exploit happened. They try to act as a white hat hacker. We'll go through this quick, but holy goodness. Kraken security update coming from Nick Perocco, who's the chief security officer at Kraken FX, which again is one of the big crypto exchanges. On June 9th of 2024, this year, we received a bug bounty program alert from a security researcher. No specifics were initially disclosed, but their email claimed to find an extremely critical bug that allowed them to artificially inflate their balance on our platform. Every day we received fake, Every day we received fake bug bounty reports from people claiming to be security researchers. This is not new to anyone who runs a bug bounty program. However, we treated this seriously and quickly assembled a cross-functional team to dig into this issue. Here is what we found. Within minutes, we discovered an isolated bug. This allowed a malicious attacker under the right circumstances to initiate a deposit onto our platform and receive funds in their account without fully completing the deposit. To be clear, no client's assets were ever at risk. However, a malicious actor could effectively print assets in their Kraken account for a period of time. We triangulated this vulnerability as critical, and within an hour, 47 minutes to be exact, our team of experts had mitigated the issue. Within a few hours, the issue was completely fixed and could not reoccur again. Our team found a flaw deriving from recent UX change that would promptly credit client accounts before their assets cleared, allowing clients to effectively trade crypto markets in real time. This UX change was not thoroughly tested against this specific attack vector. After patching the risk, we thoroughly investigated the situation and quickly discovered that 3 accounts had leveraged this flaw within a few days of each other. As we dug deeper, we noticed that one account was KYC'd to an individual who claimed to be a security researcher. This individual discovered the bug in our funding system and leveraged it to credit their account with $4 in crypto. This would have been sufficient to prove the flaw, file a bug bounty report with our team, and collect a very sizable reward under the terms of our program. Instead, the security researcher disclosed this bug to 2 other individuals who they work with who fraudulently generated much larger sums. They ultimately withdrew nearly $3 million from their Kraken accounts. This was from Kraken's treasuries, not other clients' assets. So that's a pretty big hit. The initial bug bounty report did not fully disclose this transaction information, so we contacted the security researchers to confirm some details to progress with rewarding them for successfully identifying a security flaw on our platform. In turn, we requested a full account of their activities, a proof of concept used to create the on-chain activity, and to arrange the return of the funds that they had withdrawn. This is common practice for any bug bounty program. These security researchers refused. Instead, they demanded a call with their business development team, i.e. their sales rep, and have not agreed to return any funds until we provide a speculated dollar amount that this bug bounty could have caused if they had not disclosed it. This is not white hat hacking, it is extortion. We have had a bug bounty program in place for Kraken for nearly 10 years. This program is run internally and is fully staffed by some of the brightest minds in the community. Our program, like many others, has clear rules on the road with do not exploit, a whole bunch of other things. We have never had any issues with legitimate researchers in this way and are always responsive. In the essence of transparency, we are disclosing this bug to the industry today. We are being accused of being unreasonable and unprofessional for requesting that white hat hackers, in quotes, return what they stole from us. Unbelievable. As a security researcher, your license to hack a company is enabled by following the simple rules of the bug bounty program you are participating in. Ignoring those rules and extorting the company revokes your license to hack. It makes you and your company criminals. We'll not disclose this research company because they don't deserve it, recognition for their actions, yada, yada, yada. And just, yeah. And so apparently it's like Certic, which is like a huge company within the space. And so that story is just unbelievable that it went from, hey, we're a white hat hacker to we're going to try to extort you for a couple of mil. Unbelievable. Some news from Immutable saying new wallets. Buy an NFT on Immutable ZK EVM, get $5 US of IMX token for free with a limit of 1 per wallet. Interesting. More incentive models coming on chain for buying your favorite NFTs. Lots of tax scams coming through. Phone calls and text messages saying you owe back taxes or something scary. The IRS, or in Canada, the CRA, will never call you. They either send mail through UPS or people to your front door. No texts, no emails, no phone calls. Stay vigilant. Don't get got. 100% reminder for security. Always be super vigilant and question everything that comes through. Apparently, CNN is publishing articles about NFTs. Does that mean it gets more hits than others? I have no idea, but apparently they wrote an article saying crypto's pudgy penguins at risk of extinction due to the liquidity crisis. Probably talking about the bend down information that we went over yesterday. And of course, go check out the live stream on YouTube to see yesterday was one or just on the timeline on X. So here's a really interesting graph talking about Bored Ape Yacht Club from the height of the 150 ETH to the 8 ETH, and it's showing where Steph Curry originally bought the ape, the Mutant Ape Yacht Club launch, and if you go like straight across the line, all those things happened under 20 ETH, and Yuga raised $450 million when they were around, it looks like just under 80 ETH. They had the other side mint when apes were just below 60. They bought CryptoPunks actually when it was around 100 ETH, which is insane. And then the ApeCoin launched when they were right around 60. And then you can see a huge cascading effect which actually happens quite often, as we saw with Grapes and any other token that had the upfront claim. If you guys are in the Futureverse community, in the original breakdown for Futureverse, they said that the token allocation was going to have like a drop initially and then over time. Obviously, they changed that because they saw the trajectory of all these tokens where if you have like a mass release of that token initially, then it's just kind of pretty much a complete free fall from that, which, I mean, obviously there's the greater market sentiment within it. But again, as I've always tried to say, with these different tokens and whatnot, there is always that kind of reaction to whatever the price of those are because you are subject to yield. But we're going to get into more yield here in a momentary. Now, some interesting news, though, coming here from Herman, who is a part of the Improbable, which is helping build Otherside. People keep asking me if Otherside development is going well through private messages, so I'll just tweet this. Yes, it's going well. That CEO guy talking about Garga, they have at Yuga. He seems to know what he's doing. The tech seems to work. The project seems to have reasonably strong design thinking. Things are happening quicker and more iteratively now. Again, a little bit of shade, I think, at the whole Daniel Allegre corporate side of things, because from the rumors and everything that's been said is that didn't go as planned. Now, something kind of cool here, if you are somebody who owns an ATEM car, they did provide 3D files. I need to figure out how to do these because this is actually really, really neat to see the inside of things, and high quality imagery from those 3D files looks super, super sweet, and I got to do that with my car. So Gandhi, which is a lending and borrowing platform for NFTs, is highlighting how they have 23 autoglyphs active on loans. And it's just making me think, with kind of the fall that we're seeing within CryptoPunks, and obviously this is the greater NFT marketplace as a whole, but we talk about these high quality digital art, yada, 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 yada. But at the same time, there seems to be so many opportunities to acquire yield of some massive support that it feels weird when you have all those great opportunities to hold something that's arguably illiquid. Obviously, the traditional art market has some massive, massive sales, but I wonder if a part of what's going on here with the NFT space is the recognition of like, hey, there is no yield. Why are we holding these things? We hope that somebody's just going to buy them for a higher price, or we just like the art, which, you know, we like saying that as well. Now, did you guys know, apparently Pringles are not actually potato chips. It's some powder that they mold together. Unbelievable. I thought Pringles were this great potato chip, but it's some stupid little powder thing that's mushed together, and oh my goodness, Pringles are ruined. Unbelievable. That's going to be it for this edition of XFeed. Thank you so much for tuning in. I'm not 100% certain if I'm going to be live tomorrow, so we might skip tomorrow and then be over on Friday. Hypnotoad, what's going on? Why would you ruin Pringles for me like this? I didn't want to play the whole video because they ripped on it pretty bad, and I was like, damn, this actually like totally ruined my impression of Pringles. So if I did that for you, sorry, but maybe we'll be on like a health kick journey together, right? Anyway, that's going to be it for today. Thank you so much.